Hi there, this is Ten. Today we're talking about a British EV company that is taking up entering the market. Given that the EV space is getting more and more competitive, investors are spoiled for choice in deciding which company they should invest in. There is clearly a clear first EV company. However, investors do not know which company will come second. Some say it will be NIO due to its growth in China, while others pointed to another US-based company. Some also feel that this company could be the next Tesla. The company I'm talking about is Arrival. In today's video, we'll be talking about how Arrival could compete with its peers. Before we continue, please smash the like button, and if you like to see more such videos, please subscribe to this channel. Firstly, we're talking about the business model of the company. Arrival is a British-American EV manufacturer based in the UK, which is primarily on light-weighted commercialized vehicle. In June 2020, Arrival announced a new passenger bus designed for COVID-19 era social distancing. In March, Arrival acquired a new factory in Bristol, which planned to be operational by 2021 and start production in 2022. In 2021, Arrival established its North American headquarters in North California. Arrival claimed that their EV are the first EVs that cost the same as petrol and diesel equivalent. The company has created an EV platform that can be scaled to make many variants in multiple vehicle categories. It was announced that Arrival has raised $180 million from US fund manager BlackRock in October, adding to previous investment from Korean automaker Hyundai and sister company Kia of $111 million. In November 2020, it was announced that Arrival will list on Nasdaq by merging with a Spec company CIIG Merger Corp. Secondly, we'll be talking about how JP Morgan values UK electric car startup at $3.3 billion in 2020 after Hyundai and Kia invest. The Hyundai Motor Company and Kia Motors Corporation has made $100 million. Secondly, we're talking about how JP Morgan values UK electric car startup at $3.3 billion in 2020 after Hyundai and Kia invest. Hyundai Motors and Kia Motors Corporation have made $100 million Euro investment in Arrival, the little-known UK-based startup specialized in EVs. According to Arrival, the investment values the company, which was established in 2015, at a staggering €3 billion. JP Morgan led the firm funding round and valuation. In an announcement, it was explained that the new partnership will allow for the co-development of eco-friendly vans and other products for logistics, on-demand ride-hailing, and shuttle service companies. End quote. Hyundai will invest €80 million while Car contributes $20 million. Arrival develop materials, software, and components, while its scalable electric platform code can be adapted for multiple vehicle categories. End quote, according to the announcement. At the moment, the firm is undertaking pilot programs with logistics companies in Europe that use vans built with its technology. The last few years have seen several major automotive firms make significant plays in the EV sector. In November 2019, the Volkswagen Group officially started a series of production of its ID.3 electric car, with the German car maker planning to launch almost 70 new electric models on its platform by 2028. Hyundai Motor Group has said it will launch 23 battery electric vehicles over the next few years. For Volvo, wants 50% of the cars itself to be fully electric by 2025. Thirdly, we're talking about new zero-emission buses set to arrive on UK roads. One of the UK's biggest public transport operators is on track to use the zero-emission buses from Arrival, a firm specialized in the production of commercialized EVs in so-called microfactories. The vehicles will be single-decker and have enough seats for 36 passengers. The company's trial of buses produced by Arrival follows on from a previous pledge to stop buying diesel buses after 2022 and to run a zero-emission fleet by the year 2035. In January, First Branch launched a fleet of hydrogen-powered double-decker bus in the Scottish city of Emblem. Last November, the business said it will go public through a merger with a US black check company in a deal that gave it an enterprise value of $5.4 billion. The business is currently working on two of its microfactories in South Carolina and Bicester, a town in the UK. The trial involved First Bus and Arrival is another sign of how low and zero emission vehicles are starting to play an increasing bigger role in urban mobility as municipal authorities around the world attempt to tackle air pollution and reduce the number of diesel and kerosene cars on the streets. In major capitals such as London and Paris, for example, bike-sharing schemes offer people the chance to carry out short journeys on two wheels, while many cities are not encourage residents to walk to the destination rather than drive. Next, we're talking about the setting up of a production facility in North Carolina to produce a UBS fully electric fleet. A British electric vehicle company is putting down roots in the US and plans to take its new production concept global as demand for its new mobility system grows. President Avani Bigorber told CNBC Jim Cramer its vertical integrated microfactory require less space and capital investment than traditional manufacturing facilities. Quote, "We are partnering with the city of Charlotte to produce a whole transportation ecosystem together," end quote. He said in a Mad Money interview. Quote, "When you look at the global scale that needs to shift to being electric, we expect to have microfactories, all around the world," end quote. Arrival said it is on a mission to accelerate the transition to zero-emission commercialized vehicles. The company claims a competitive advantage in that it designs its own batteries and other components in-house and writes its own software, the president said. Finally, we're talking about the deal to bring this company to public via a SPAC. British electric vehicle startup Arrival announced that it will go public through a merger with a US plane check company. This year has seen a flurry of SPACs come to market as businesses have shunned the traditional IPO process. SPACs are companies that raise funds to finance a merger deal that takes the target firm public. In Arrival case, the London-based company is set to combine with CIIG Mergers, a SPAC set up by US businessman Peter Krono. Krono previously ran the American personal care brand Remington and comic book publication Marvel as CEO. He will join Arrival board as non-executive chairman, while founder Dennis will remain as CEO. The deals give Arrival an enterprise value of $5.4 billion. Arrival said it stands out from other electric vehicle makers as it's purely focused on the commercial market rather than selling to consumers. Founded in 2015, Arrival said its technology is vertically integrated all the way from production to development. Next, we're talking about how analysts feel about the company's potential. CNBC Jim Cramer endorsed CIG merger. The US plane check company set to take UK electric vehicle maker Arrival public this year. It's a speculative stock for investors to play. Quote, "As much as I like this story, I think you can be patient," end quote. The Mad Money host said, quote, "But given how much this one already pulled back this week, I'm giving you my blessing to start picking at it tomorrow. Then I want you to wait for maybe a better pitch," end quote. CIG shares are down from a late November peak when the stock more than tripled in value in a matter of 6 trading days. The stock is down about 20% to $23.74 a share since November 24th. Cramer said he will be more bullish on the stock if it comes down roughly $6 from its current level, likening Arrival to the hottest electric car name on Wall Street. Arrival plans to manufacture electric buses and vans, rivaling the like of Ivan. Arrival expects to produce $1 billion in revenue in 2022, $5.1 billion in 2023, and more than 14 billion in 2024. Next, we'll be talking about the company's Spec debut. British electric vehicle manufacturer began trading on Nasdaq following a merger with a US blank check company. The company financialized its combination with CIG Merger Corp, a SPAC set up by former Marvel CEO Peter Quill. It is now worth roughly $13 billion, up from a valuation of $5.4 billion in November. Share of the company stayed around 50%, hitting a low of approximately $18 before trimming losses later in the day. That came as other high-growth tech names also fell amidst a broad decline in US stock markets. Spec has become a hot investment vehicle on Wall Street, luring in several high-growth tech firms looking to list the shares without having to go through the traditional IPO process. Furthermore, Jim Cramer feels that it is not another Tesla clone. Competition in the EV space has been heating up over the past few years, with startups like Lucid Motors in the US and NIO in China aiming to take on Elon Musk's Tesla. But Aviva says it is different to other players. That is because the company focuses on the commercial sector for EVs instead of trying to sell them to customers. Its products include electric vans and buses and not cars. Another thing separating Aviva from other major firms in the EV space, such as Tesla, is that it designs its own battery and other components in-house rather than relying on third-party suppliers. Meanwhile, Aviva plans to build its vehicle from what is called microfactories, which are much smaller than traditional automakers' facilities and can be packed into existing warehouses. One of Aviva's main competitors is arguably Rivian, an Amazon-backed firm that produces electric trucks. Aviva signed a commercial agreement last year with UPS to provide it with 10,000 electric vans. Amazon in 2019 ordered 100,000 electric vans for Rivian as a push to make the company's fleet run entirely on renewable energy. In conclusion, a British EV company has entered the public market. Given that it is quite different from its peers, some investors feel that the company might have a chance to compete against Tesla. However, as there are a lot of different companies competing for the top few spots, most investors do not know which company will succeed in the end. On top of that, some of the traditional car makers are entering the market. Hence, this will lead to an increase in competition in this space. Therefore, it is very difficult for me to enter the market. With that, thank you, have a nice day, goodbye.